All right, so no music. You get to listen to my voice. All right, what do we have here today? I was out most of the day. Looks like we picked up a few more positions. Looks like TXRH was really good for us as far as hitting. Um, Anyways, I wanted to combine this with the end of day because probably not going to be too much going on for the rest of today. Um, Seeing as that we've had a pretty good down move in the market. A lot of people getting shook at, a lot of money being lost because it's just the nature of the beast. Well, let's go down through a few of these before we get into last month's statement and show you what um, a gain is, even though you're in a losing market. Um, you're always moving forward. This is the whole thing. So there's TXR8. So you can see the two buys, two sells. Uh, Posted that last night after hours. I don't know what was going on. I think it had something to do with earnings. I don't know. I don't follow them. Don't care. If the company's paying dividends, it's making money. Bottom line. So I had a couple of questions. Why do I just kind of flick around through if I don't care? Basically, for a half hour per day, uh, all the different accounts or all the different portfolios that I look at, I look down through them to see, get a general idea of which way the market's moving. It's just to stay engaged. It has nothing to do with the strategy. I'm not looking to put on any other positions. This is all done pre-market, if you want to say on Sunday. Um, I make adjustments. The only adjustments would be on the next strike price that you're going to hit, or you're going to enter another position. Always using the scan. Scan is number one. All the rest, you look at this chart here of SBR. If you've taken the course, you understand what these are. I use Fibonacci tool. I have to keep explaining this. It is not Fibonacci. Okay, we're not playing with the mythical Fibonacci fans, levels, whatever you want to call them. There's so many different ways to play it. You're just putting yourself in a corner. What we do is manage money. So keep that in your mind, in the foremost part of your mind, that we're managing money. The position doesn't really matter, or who the company is. As long as they're making money, then we should be getting a dividend from it. Just because this is one reason why we don't trade on these smaller accounts, we don't trade any growth stocks. Reason for that is they don't pay dividends, right? So they're reinvesting their money back into their companies. So you can study all that you want. I've been doing this long enough to realize that there's so much misinformation out there. You don't know if you're getting the truth. All I know is if they're paying me a dividend, that's real when it gets put into my pocket. That's what all the good investors do. They look for a return on their investment. So if you're losing money, you're not getting a return on your investment. Work it out. If you make $500 but you lose $500, you're zero. You might have felt good about that one trade, but we want to keep growing. Let's just take another look. Look like I don't know what we're down overall. I'm only concerned about these accounts. I don't care if I go over here and I look at what the overall market's doing. I look at these as gauges. That's it. I don't care. I'm not investing in this. I don't see any dividends here. Not interested. This obviously oil futures, YM futures, TLT. Look at there. Yeah, we're invested in that and quite a few different portfolios. But there's certain levels that you pick based on math. It's not based on somebody told me this might be a good thing to invest in. Netflix keeps on dropping, and that's why we don't invest in it. Why? There's nothing there. You want to buy a lottery ticket, do it. You know, that's what you're buying. You're guessing. You got a 50-50. It goes up, you win. It goes down, you lose. Plain and simple. NQ still taking a beating. People getting shaken out left and right. Let's go short. Oh, let's go long. Anyways, like I say, doesn't look like anything's going to happen today in the latter parts of the market, but I just like to look through, see what's happening. I don't sit in front of this computer all day, hoping and praying, oh, is it going to come up? Is it, is it going to do this, going to do that? Now, one thing I do, the real reason I watch this is just in the event, in that 30 minutes, the two best times to be following the market are the first 30 minutes and the last 30 minutes. There's different times of the day where certain things happen in the markets. All institutional algorithmic trading take place. Don't involve yourself. Don't get into the weeds. All you're looking to do is take money out of the market. But where are we at here? Yeah, I don't see anything really happening here. Let me pull up last week's scan just to give you an idea what it looked like. I showed it earlier this morning. And you can see quite a few of these, we had already had them in some of the different portfolios, but a lot of these didn't hit. Now, if you're playing the pullback strategy, that means that the open on Monday or the close on the previous Friday was 104.69, and we were looking to get in. We put an alert down at 103.33, and then we trail it. That's the trailing strategy. Now, if you're just doing the limit strategy, you would buy at the 103.33. Okay, if you have a small portfolio or you're just getting in, then you got to get your money in the market. It ain't going to work for you sitting on the sidelines. That doesn't mean put it all in there, but that's you've got to be doing this to understand what's actually happening. A lot of people, well, let's go AIT. Well, I can do max shares 18. Well, this is a risk management level. Okay, and everything that you're looking at here, this portfolio is under 100,000. So once you're over that, then I explain how these change. The max shares change. Actually, the max shares don't change, but your share amount per level changes. So this is a risk measure. Don't be fooled by saying, oh, I can go max shares and just buy 18. If you're under 100,000, that's too big a part of your portfolio. As the price declines, then your risk goes down. Okay? If the price comes down, your risk goes down, but you're still coming back in with the same multiples on shares. So here you'd be going 2. I always just round it up. Here 1, here would be 4, here would be 1.2, 5. You can round it up, do whatever you want to do with your Excel spreadsheets. When I send this out, I send it in an Excel spreadsheet, and you don't have to use these. You can use your own, but I've got algorithms that make me pick these, okay? And if you looked at all of these stuff, let's just take a look at VLO. Did it come down? No, it went up. See, it never did come back down and hit. Told you the previous week in newsletters or on Reddit, watch oil, okay? It's not going to come back down anytime soon. I think we're probably in for a pretty rude awakening at the gas pump. But where was I at? How did I get onto this one? Trying to get back to, well, somehow or another I closed it out. There we go. All right. So yeah, see, oil futures still rising. I don't know where it's going, but I have a sneaky suspicion, right? That doesn't mean I'm going to run out and go all in on this. Why? Well, first off, I don't get paid anything to hold this, so I'm not interested. Now, if we looked at maybe XLE, there's a quarterly pair there. Maybe that's a different option for you. But what's even better is when you get the scan in, right? You see how many we got on here: W or VLO, PXD, but that's, you'd have to have at least 200,000. That's why that's yellowed out. Make sure you don't buy it if you're under 100. it's too much risk. It's too pricey for your portfolio under 100,000. 2 MPC Marathon. There's probably another one in there, but I got to try to get through this before we run out of time. All right, so let's go to last month's. I normally do this in a separate video, but I'm going to be away this weekend. So you see up here, April 1st through April 30th. This is one of the smaller accounts that I show every month. So let's look here. So we started the month off at 30,000 and 30,145.28, and we ended the month at 28,630.35. Now I know what you're going to say. Oh, see, you took a loss. You're lying. I'll say, okay, if you don't understand between realized and unrealized losses, okay, we didn't lose anything. Okay, we're talking about trades. Okay, we continue to bring in this amount here, the dividends. Okay, and then we look down here and we look at our trade profits. Okay, so remember, we're trying to hit that 1% for the month. We said, well, you didn't make it. You're down -5. I was like, well, no, that's actually not entirely true. So what we do is we take this 100, 19, right, and the 61.72, and put those together. I'm using a mouse, so that's why it looks like shit. Plus 61.72, so it's 162.51. So now what we do is we take this number, so that's our starting value, right? Divide that, 145.28, and then we multiply that by 100. So it gives us 0.54%. Now that's a little bit of a ways off from 1, right? Almost half. Well, we're looking to target 1%. But if you look at our, I'll bring this up here, 0.54%. Let's just multiply that by 12, and that's 6.4 6% APY. So that's well below what we want to make for the year, but this is still a positive. The rest of this, so if we take that -5.03 and we add that to the 0.54, we're actually down, right? The overall portfolio, an unrealized loss because we don't sell anything at a loss of 0.449. A little bit better, but still, yeah, everybody was down in the market, right? But we still made money. Now this is, when we look at the cumulative account for last month, we see we came up at 0.76. This is one account. These are 3 accounts, okay? So 2 of the accounts did better. Not all of these accounts mirror one another as far as what's held in the portfolio, so don't make that mistake. If you're taking, you know, maybe I use evens, odds, it's hard to say, you know, how you want to structure your trades, either off a scan or off of what you do. Okay, but if you're using multiple accounts, you want to spread your risk out as well. So, yes, that's not what we want to hit, but still, it's a positive. We're still, your chart is still doing this. Okay, if you put it up, it should look like this every day, every month. Just keeps going up. And then the next year, it does this, right? It just keeps going higher and higher and higher. That's the whole idea behind this system. Once you get this down, you know, was it 6 point, let's do this, rule of 72. Rule of 72 divided by 6.46. That's still only 11.15 years. Okay, to double right at this point that amount there of 30,145.28. Okay, 11 looks like a 7. 11.15 years. That's if we just go to shit in the market and all you're really doing is collecting dividends, right? You made 100 on dividends, and looks like a light month for dividends, but that was only 29 days too. So, and then we look down here, we only had trades of 61.72, but overall you start combining accounts. In this case, these three come up to 0.76 or 9, so 7.9 years. It's just a numbers game, people. Don't get wrapped around the axle with all the things that you're hearing out there of people making a killing in the market. They're not. But now, one thing you need to understand is we're not adding any cash to this account. Okay, that's what we're trying to show you is how you can. This is the purest form to show you what you're actually making on your money. It's like, okay, take your 30,000, stick it in the bank, right? What are you getting? 0.1%. I think I've gone over that before. You won't live long enough to double your money. Okay, so this is use the simplest form to look at how to double your money. 30,000. Okay, 11 years. If it's 1% per month, it's 6 years. It's simple, right? So half 6 would be 12, right? You can figure that one out just in your head. So if we start adding, if you're working, right? Same with the other accounts. If you're adding money to your accounts, they're going to grow faster and you have more cash to deploy. But what we try to strive for is that 1% per month. Now, if we go back and look at some of the other months, let's take a quick look. We had 0.7. Month before that was 1.4. Month before that, 0.56. That was for all three accounts combined. So that was worse in, what was that, February? Yeah, February. In January, 1.5. So here's an easy way to figure out where you're at so far in the year. All you have to do is add the 1.05 plus 0.56 plus this one 1.04 plus 0.76. I don't want to put that on there. Plus 0.76. So we're at 3.41. We're about 0.5% shy of where we need to be. Now, of course, we're coming down. We don't know how far it's going to come down. Don't guess. Just let it happen. But if you have your strategy in place, everything that you're accumulating, it always is going to come back to the mean. So the mean in this case is 1, right? 1%. That's what I've found over the years. If you can achieve this 1%, you will double your money faster because you're going to have really good months. Like we've had several good years. And what are we at? 697 days. So we've got 33 days to go to hit 2 years without taking a loss. So this account, basically in 2 years, if it's picked up 12%, we only have, 24% in those 2 years, then we'll come up on, you got 24, so that's what, 70, about 70% to go. It's not that hard. Just keep the numbers in your head and stop getting the FOMO. I keep hearing everybody talk about it, and it's like, oh my God. Just relax. Let the money come in. Keep on working. Keep putting money into your accounts. Understand that if you can find, what did I put up there the other day? The Treasury, like 9.5%. Hey, that beat me this month, but can it beat me long term? We'll see. I mean, I'll probably end up taking some cash and buying a couple of those before the end of that term. I think I can't remember what the term was. Anyway, I posted it up there. I'll go back and look at it, but right now I just concentrate on the accounts that I'm servicing right now. I'm not interested in redeploying that cash till I see what actually happens. But stay ahead of the curve. Don't be reactionary. Don't be like, oh, hey, I think Maine here looks good. See, Maine, it's a CEF, right? Oh, see, this chart's telling me it's down at the bottom. Hey, listen, that's not the complete picture. Whatever you're looking at, even this is a weekly chart. People are using minute charts, and they think they know what the direction's going. I still don't trust any direction. It's like it can go anyway. It can stay still. It can go up. It can go down. Stop thinking that way. I'm telling you, start thinking about what investment is trying to get as many shares as you can, or cash out for the dividend amount for the year. Okay, let's use Maine as an example. $2.65. That's per share, right? Per year that you'll make if you invest in this CEF, Maine. So you're like, okay, Main Street Capital Corporation. So you got 12 shares. So if you multiply that out, right, what are we trying to make off of this one particular? I like to break it down into the smallest, 6.5. So you're making $32 in a year, right? And I don't know how long we've had this. Let's just say we've had it 6 months. It looks like it could possibly be at least 6 months since our last cash out. So if I can hit this red line, the sell limit, right, within 6 months, I just beat, I get that $2 and say 65 cents quicker than having to wait for a year. Worst case scenario, I get to sit back and collect each month until that event happens. Now, if you think this is going to zero, then don't invest in it for whatever reason that you have. But you're never going to make any money in the market if you keep thinking you know where it's going. You have to be able to decide, I'm doing this long term. Long term means minimum 10 years. Okay, minimum. So if you know you can double your money at 1% and it's only going to take you 6 years to double your money, then you might double your money twice, right? If you manage it correctly and don't get FOMO, don't make mistakes, don't go too big, follow the rules, everything that I keep preaching to everybody. Everybody that's using this method that I've taught, these protocols, nobody has lost money in over 2 years. Okay, this particular thing I showed 697, so you get 33 more days. Is it possible we get, something falls off, somebody, let's just say, what's this one we got here? Let's see, CHKR. Let's just say this comes off and just goes away. So we'd lose $791. And that would show us a loss. We'd have to start that counter over again. This is the way it works. I'm just showing you that you can do this without losing money if you're willing to play the long game. Now, I've doubled accounts in the past just by using this same formula. And anywhere from 200 to 400. This is what I'm saying. In 6 years, you go from 200 to 400,000. That's just the difference in scale. We show these small accounts because I'm telling you, if you can't get this down, you don't have patience with under 100,000, even under 25,000, you can forget it. Once you get up to 200,000, you'll lose your mind. You'll be freaking out because you're so worried about seeing a number up here daily negative 14,000. You're going to be freaking out. If you can't handle that, if you don't understand what's actually happening, then you're going to freak out and you're going to close out and say, well, at least I didn't lose it. It's like, yeah, you did. You lost it. All right. These numbers fluctuate. Unrealized gains, unrealized losses is exactly what they say they are. Unrealized. So it's like I say, nothing going on here in the afternoon segment. There's another popular one. Made a lot of money off of SBR, Sabine Royalty Trust. And the reason why I like the CEF so much is because a ton of institutions use them, and it's all about occurrences. So anytime that you get a dividend payment, that is an occurrence. Anytime you get paid for anything, that's an occurrence. Okay. So like you say, oh well, let's just look at a trade log. All right. You're like, oh, there's one for 274, 350, 278, 470, 724. And you go down through this list. If I was to show all of these, I know like my CPA, he can't stand this, right? Because there's so many trades. Now, of course, it's all accumulated into one ledger. And he's always asking me, he said, you sure you don't have any losses? I was like, exactly. He said, well, you know you're going to pay. And I was like, I'm willing to pay. You know, I got to pay those taxes. But the whole idea is if you're taking losses, you're taking steps backwards from your goals. If you're constantly growing, eventually you don't even have to worry about this. All you have to do is say, okay, well, now I'm going to, you get up to the, depending on your lifestyle, you know, if you've got $1 million home, 2 cars and everything that's paid for, yeah, you know, maybe you've got, I don't know, $1 million portfolio. You can shrink this down, or, you know, if you just want to continue to play it, then you're like, well, I'm going to use the same strategy that got me here because it doesn't fail. So your money is safe, and then you can say, okay, well, what's 12% on $1 million? That's 120 grand a year. You know, do you really need that much if everything's paid for? I mean, I can't eat 120 grand. But people get worried about the future because they're worried about how much money they have. If you've got 200,000, you're just getting ready for retirement. There's a couple of people that I work with that, you know, are in that situation, and they're deep into retirement, and they only have 200,000, and it's sitting over there. You know, now they're managing their own accounts, but it was sitting over there at Edward Jones or Raymond James or something like that, and they were making less than 3% on their money. I mean, you're making 6 grand, you know, a year. I mean, double that per year for somebody that is unlimited or a strict income, low Social Security, didn't make a lot of money in their life. Then this is a huge benefit for you just to be able to say, well, okay, I can manage my account. The other option is you just take your 200,000 and you stick it into Coke and you make your 3%. It's the same damn thing, right? But you're never going to make that 12%. So 12% on 200 is what, 24? So, isn't this closing? There we go. So we'll take another quick look around here before it closes, because you know, we got the market scans on the weekend. A lot of folks are going to sit there and think you've got it all figured out, and you end up making some mistakes, and then you go back over. Get this down. This is basically free advice. You know, I'm not telling you what to invest in. You ever notice that? I'm never telling you a specific company to buy. Ask yourself a question. Why doesn't he ever promote a specific stock? So why don't you ask Jim Cramer that, or any of these other gurus that are out there that are pushing something? Well, they're paid to do that. That's what they're there for. It's entertainment. So if you've had bad experiences with it, learn this stuff. You know, and don't worry about missing something. You know, the worst thing you can do is chase something. Goes up like that VLO took off, and people are like, oh, I got to get on that. And it's like, come on, man, you missed it. If you're going to buy it on the limit, buy it on the limit. Buy it on that Friday close. Use the scan. Understand what the different strategies are. I'm in pullback mode, have been for 8 months, just protecting capital. The reason why I do that is because I'm conservative minded. I'm not trying to, I could have made a little bit more money going on limit, but hindsight's 2020, right? You don't know what the market's going to do. Maybe I could have lost more. Not lost more, but not made as much, because I'm always making money. I'm not losing. And if I do take a loss, it's not because of stupidity. I don't have fat-fingered trades because I'm in a rush. Everything is already preset. So when you get your scan, you should know what you're going to buy for that week. You ought to know exactly what you're buying. If you don't know exactly what you're buying, stay the fuck out of the market. Just stay out, because you haven't got a clue. It's luck at that point. You haven't done any type of strategizing. You don't have any kind of rules in place. You don't know what your target prices are. You don't even know how much money you want to make, right? Based on the size of your account. The biggest mistake I see people making is they come in with $5,000 and they're like, yeah, I want to make $1 million this year. It ain't going to happen, buddy. It's just not going to happen. If you read somewhere that, so-and-so did this, it's like, yeah, that's the same guy that won the lottery ticket too. It's a once-in-a-lifetime occurrence. Call them, what market crash, black swan. How many people are falling into that consciousness where they're selling this market and they're going big? And to go big short, guess what you have to do? You got to borrow that money. They're hoping there's so many people, that there's so many schmucks out there that are going to be like, oh yeah, I'll do it, because I want to roll the dice. That's all you're doing. So I could ramble and ramble and ramble. I've known so many people that have lost so much money in the markets, and they take second jobs to try to keep up so they can't lose their car. It's like, why don't you don't have to, it's not playing it safe if you're in the market. What it is, you got to play it smart. That's why I post this stuff on the statistics. The statistics don't lie, but I can tell people straight to their face, you're going to lose money trading this, the way you're trading. You just can't go out and, oh, well, somebody told me that Netflix, at 600 is a good buy, Jim Cramer, and they go all in, or what they have. Like if you had, at $600, if you had $6,000, now you got 10 shares. Good on you. Now, what are you going to do? Are you still holding it? You just gave away $6,000. You're never going to make anything off of it. It's got to come back to 600 for you just to break even. So you're letting somebody else use your money. But if you're getting paid dividends, guess what? You're chipping away at that cost basis every time. So if you had to hold that stock for 20 years, more than likely for 20 years, what type of interest rate do you have to have? 3.5%. Okay, it's that simple. But everybody wants that get rich quick. But keep thinking that. If you're listening to this, you're probably interested on how not to lose money, or you're thinking, how is this guy really making money? It's like, well, once you're involved in it and you see how it's done and you do it for yourself, then you'll understand it. But until then, all you're doing is watching some guy trading on here, and you really only have a vague idea of what I'm doing. But it is what it is. So have a good weekend. Scans come out on Sunday. I'm assuming there'll be a few on there, just based on market structure this year or this week, but we'll see. Quite a few greens here, so it's a little tip. If you see some greens in any of your portfolios, the scans could quite possibly have some in, because it's not just what's in my portfolio, it's across the entire market. All dividend paying stocks, and specifically everything that I look at is a minimum of $1.20 per share per year. So that's all you have to know. If you know what the price is, you can figure it out. So let's see. Do this quick little thing here for you. So you're looking at a stock with a minimum of $1.20 per year in dividends, right? And you divide it by, let's say the stock price is 30 bucks, right? So that's 4%. Multiply that by 100 to get your percentage. It's 4%. So if you had $1.20 at, say, 10 bucks, well, you're never going to find a stock at, let's go 80. Oh, dang it. Divided by $80 a share, and multiply that by 100, that's 1.5%. That's your yield per year, all right? So there's a lot more that goes into my algorithms for figuring out what's on my scans, but you can use whatever you want. That's the beauty of this. But if you don't understand the rules, if you don't understand the structure, you know, I'm not saying you can't do it, but you'll be 50% there if you understand it. Playing this long is the way to do it. You know, Buffett's no idiot. And he's not the only one. Go over to Stock Gurus. Take a look at all the people that are involved, all the billionaires, all the millionaires. Take a look at the size of their portfolios. Now, there's some that, you know, oh, well, I just want to do, I don't know, 5, 8, whatever. There's somebody out there. I can't remember his name. I don't follow any of these guys because I know the system. These guys, shit, 2,000 stocks in their portfolio. It's like, holy shit. I was like, that's a hard way to go. And I think his portfolio balances are somewhere in the, you know, billions of dollars. So, I mean, he's got 50,000 shares of this, 50,000 shares of that. They're obviously hedge funds, you know, or just investment funds. But they're, you know, some serious money there. So you can just imagine what they're pulling down on a daily basis on dividends. Here, so we're talking small accounts here. So I'm trying to show you how you can do your own without having to hand over your money to somebody and they make money off of you. This is for yourself. So if we're at $53.16, this is last month, on average per day, right, for days open, and that's on a $140,000. We're talking billions, all right, or even millions. Well, just, you know, put this decimal place over 3, or let's just be conservative and go over 2. $5,000 a day. I mean, where do you think the money's actually going? It blows my mind the way people think, but obviously it perturbs me because I'd like to see people be more successful and not be so stupid and get off the gambling bandwagon or this merry-go-round that everybody gets on. Anyways, that's it on this week. And what time is it? Shit, we went over there 4:06. But yeah, check it out. If you got any questions, just shoot me an email. All that information's on the website. I thought I had something else here that I was going to talk about, but yeah, no, just isn't it nice going into the weekend not knowing? So, well, I hadn't taken a loss this week. It's like, oh, I look up and I was like, well, that's 700, or coming up on 700 days. Well, Monday it'll be 700 days because I'm going consecutively, not every day. I'm just saying because I'm making dividends on the weekends too. Believe it or not, your account is accumulating those dividends on the weekend too. So that's why it says no losses. So as long as I have money coming in, I will post a loss when it happens. You know, but it hasn't happened in almost 2 years. So I must be doing something right. So if you're interested in learning how this works, then give it a shot.